Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Now we're going to talk a little bit more about retail, specifically Walmart, because this stock is off and flying.
Yeah, Walmart shares up 6.8% right now, up the most in more than 4 years. The world's largest retailer, a barometer of growth, soaring, Carol, after raising its sales guidance.
Yeah, the Bentonville, Arkansas-based company says it now expects net sales to rise as much as 4.75% for the year versus previous guidance for a gain of as much as 4%. So definitely bumping that up. It also raised its targets for operating income and profits. It sounds like everything is awesome. So let's get into it with Bloomberg Intelligence senior retail staples and packaged food analyst. So psyched that she's back with us. She's there in BI headquarters in Princeton, New Jersey. Jen Bartashus, good to have you back with us. So Walmart, it feels super good, but you're the expert, is it?
Yeah, Walmart had a fantastic quarter, and there's no question about it. And in an environment where people are seeking value, Walmart is flourishing. What I would say, there were some very interesting takeaways from the earnings call this morning. And one of them that I thought was most notable was when Doug McMillon kind of called out some of the packaged food suppliers that Walmart has in terms of pricing. And that, he said about half of them have, stopped trying to pass through price increases, but the other half are still trying to do so. And when you have that in a backdrop where the consumer is really looking for relief from inflation, it was a very interesting takeaway that Walmart seems to be signaling they're going to be tougher on their suppliers.
So is that Doug McMillon just being smart, because we know Walmart is very tough on their suppliers, and just saying, hey, don't play around with me. I know what's going on. I see the numbers. Or is it really that, it's something, Jen, I'll be honest with you, we've talked about, like, why haven't prices come down more? Are they just, do suppliers know they're in an environment where people are like, yeah, they're all talking about inflation, so they expect to pay more. We can continue to keep prices high. What's your take on it? You're the expert.
Yeah. Well, I think that there's a combination of things, as there almost always is. Part of it is that Walmart does have the scale to kind of flex those muscles, but there's been also a lot of political conversation, just as you were talking about with your last guest, what are the expectations, and, there are, people are going to be talking about this as part of the election backdrop in terms of food inflation in general, making things more affordable. The difficulty is that when you look at retailers like Walmart or like Kroger or some of the essentials retailers, profit margins are only in the 2 to 3% range. So it's not like they're price gouging and pocketing the cash, right? So I think that we're going to see some of this pressure transferring up the chain back towards the packaged food companies. And that could translate over the second half of the year and into next year into additional margin pressure if there is demand that they start to lower prices more aggressively.
Okay, Jen, we're going to talk about that in just a couple of minutes. You can just read our minds with exactly where we want to go in the conversation. Before we get there, I want to kind of refer back to what you were talking about in reference to our conversation with Mike McKee a little earlier about the economy, because what struck me was actually a comment to our Bloomberg News team from Walmart's CFO, who said, quote, "We are not seeing any incremental fraying of our customers' financial health." That's John David Rainey in an interview to our own Jaewon Kang a little earlier this morning when those numbers crossed. How can we read into Walmart's results to get an understanding of the U.S. consumer?
Well, arguably, Walmart touches more consumers in the U.S. than probably any other retailer, because everybody shops there usually at some point. So they do have a very, very good read into the U.S. consumer. One of the things that's interesting, and they talked about it in their call in May and again today, is that they're pulling more higher income households into their sphere of influence. So more shoppers are coming to Walmart more frequently than maybe they had historically. And so when you take that aggregate together, and Walmart says they're not seeing any kind of fraying in the consumer, I think part of that is that as a low-cost operator and as a low-cost price provider, they're giving customers what they need, and so customers are continuing to reward Walmart with their spending and their loyalty. Other retailers may see some of that fraying that Walmart is not.
Okay, let's I want to touch on the price gouging, because that's
let's
politically a really interesting thing.
Yeah.
Jen, you started talking about margins a little bit, but because you cover packaged foods, retail staples, we got to ask you about Vice President Kamala Harris set to call for a federal ban on food and grocery price gouging as part of this broader set of proposals intended to reduce consumer costs. Her campaign said this in a preview of that first policy speech of her presidential bid. How did that statement read to you, given that you understand the economics of groceries and you also understand the role that regulators could or could not take in an environment such as this?
Yeah, I think the first thing is that everybody wants to see price relief for the consumer, because if consumers feel better, they spend more, and that's a great thing overall for our economy. When it comes to putting a ban on price gouging, it's very difficult to pinpoint what you consider price gouging versus not. The most successful cases that we've seen in the last 2 or 3 years that have actually resulted in settlements are price fixing cases that are really about commodities. We've seen that about pork, we've seen that about chicken, we've seen it about eggs, we've seen it about sugar. These are actual commodities where it's easier to prove that there is price fixing happening or that there is some sort of unfair practice that's occurring. Once you start trying to implement that at individual retailers, that gets very, very hard to monitor and to identify exactly who may or may not be violating a ban.
So could regulators go after those suppliers rather than the sellers of the products from those suppliers
great
to
question.
actually control prices?
Yes, I would expect that the most logical path to enforcing a ban like that would be with the suppliers, and that goes back to kind of what I was alluding to when I talked about the packaged food companies, and perhaps they may bear a bigger part of that burden than the retailers themselves. In general, packaged food companies have slightly higher profit margins, not meaningfully higher, but somewhat higher. Same with with regards to EBITDA margins. So there's a little bit more room to give, but most of the packaged food companies that we're listening to through this earnings period are talking about still struggling with costs.
Hey, listen, you mentioned consumer sentiment. Just 20 seconds here. When you keep an eye on, what do you watch in terms of the health of the consumer and then these consumer company space? What's the most important metric? Is it consumer sentiment?
Sentiment's important. It's just really about how often are consumers going out to stores and how much are they spending. So ticket and traffic are kind of the two big things that we always watch in retail.
Oh my God, you're the queen of consumer packaged area. We love it, love it, love it. Jen, thank you so much. Bloomberg Intelligence Senior Retail Staples and Packaged Food Analyst, Jen Bartashus, with our Bloomberg Intelligence team there in Princeton, New Jersey.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, you all know the expression, it's not brain surgery. Well, Carol, sometimes it is. Just ask our colleague Noah Buhayar, who just a bit over a year ago found himself on an operating table at the University of Washington as surgeons cut a long upside-down U on his scalp, peeled back the skin, then made a grapefruit-sized opening in his skull through which they could remove a 4-centimeter wide tumor on the back of his head.
Noah Buhayar is Bloomberg News data investigations reporter. He joins us from our Seattle bureau. And for Bloomberg Businessweek, he writes not just about his experience, but also about a renowned neurosurgeon's decades-long quest to develop a better way to eradicate tumors. Noah, first of all, we are so glad you're okay and you're with us to talk about this. What you wrote about, we just can only imagine what that time was like. Before we get to talking about Dr. Neil Cassell, and I hope I'm saying it correctly, tell us about getting your diagnosis, kind of where you were, what happened, and how you had to deal with it.
Sure. Yeah. Thank you for having me on. I mean, it was a rather surreal moment. I was actually traveling for work. I was in Nashville at a conference, and I took a break to go out for a jog one afternoon, and toward the end of my run, collapsed with a really large seizure on the downtown streets of Nashville. And when I came to, I took a ride in an ambulance, got a CT scan, and that's when the doctors found this really large mass in the back of my head.
And the mass, fortunately, was not cancerous.
Correct. Yeah. I mean, if you were going to have a kind of brain tumor, this is the kind you wanted. The pathology later showed that it was extremely slow growing, hadn't metastasized. And frankly, this is the kind of thing that a neurosurgeon wants to see because they know they'll have a high rate of success if they go in there to resect it. Okay,
we have quite a bit of time with you, so we're going to sort of go in chronological order here. A little over a year ago, you did find yourself on an operating table. Talk a little bit about the procedure and what you actually went through to have this mass removed.
Yeah, I mean, I think you hit the highlights in the intro to the segment. Apologies to folks who don't want to hear graphic stuff, but the basic operation is to make a large incision on your head. Surgeons peel back the skin. They cut through the bone, set the bone fragment aside, do what they need to do to access the area. Then they reattach the section of bone, kind of like a lid to a cookie jar, and then they stitch you back up. After this whole thing, you know, I spent a little bit of time in the hospital and then about 6 weeks at home recuperating. But ultimately, you know, within about 6 months, I was back to many of my normal activities. I had to take a break from driving because of the seizure. But by and large, I'm doing what I used to do. So by all accounts, and I don't want to disparage conventional surgery, it's incredible what the doctors can do. But when you get down to it, it's still a rather intense process to have to go through. And that's really what led me to this story.
That's exactly why we wanted you to explain what you went through, because what you spend the bulk of the story talking about is how there could be a solution on the horizon that would not require somebody to have this procedure as invasive, as your procedure was. Tell us about what you learned about Dr. Neil Cassel.
Yeah, so I learned about Dr. Cassel through actually an interesting connection. I've been on this show in the past. You all, I think many listeners know this, but I used to be the corporate reporter here covering Warren Buffett and Berkshire Hathaway. And more than a decade ago, I wrote a profile of a guy named Ted Weschler, who Buffett hired to be an investment manager at his company. And over the years, you know, I'd been following Weschler's career. And after my diagnosis, I happened to be speaking with him, and I told him what was going on in my life. And he said, "Oh, you should really meet a friend of mine here in Charlottesville where he lives named Neil Cassel." I was in the middle of a lot of stuff and I sort of blew Weschler off. But 9 months later, I was reading a news story and I saw Dr. Cassel mentioned, and I thought to reach out to Weschler again. And I started learning about this foundation that it turns out Weschler had helped Cassel start with about $500,000 and then subsequently given many more $1 million to this cause. And the thing you need to know about Cassel, I think he's a very interesting person, is that when he was practicing neurosurgery, he was one of the co-chairs of the department at the University of Virginia, and he was a really well-known stroke doctor. He was the guy that was called in when President Joe Biden, as a senator, needed 2 aneurysm procedures. He was part of the team that operated on Biden. But over the years, he was also really interested in innovative techniques. And about 2 decades ago, he got really excited about the idea of using ultrasound as a way, not as a diagnostic tool, but as something that could actually treat disease. And that's when he turned to Weschler, set up this foundation, and their mission really is to develop new ways to augment and advance treatments for a whole host of really tricky diseases by using a bunch of effects that ultrasound can stimulate in the body.
I have to say, I am a little obsessed with what happened and what you report on, and I'm sure you came across too a 60 Minutes piece that was also about the use of ultrasound, and this was basically to open up a blood-brain barrier to help drugs penetrate and help Alzheimer's patients, but also they talked about people with addictions. It just feels like all of a sudden ultrasound is potentially having a moment.
Yeah, I think it's getting more attention because there are starting to be some clinical trials that are yielding interesting results. Now, one of the things I wanted to mention here, and when I went in, I wanted to be skeptical, is because a lot of these studies and applications of ultrasound are still very, very early stage. Mm-hmm. And I just want to make that clear to people because there's an interesting phenomenon that happens when people are pursuing novel medical technologies. There can be a burst of attention and enthusiasm when you have positive results out of these early stage studies. But as we all know, there are an enormous number of hurdles that you need to jump over, both regulatory and technical, to bring a treatment to the level where it's the standard of care.
How does that go? Go ahead, Carol.
No, right? Like, because I know, like, even the stuff that I think 60 Minutes did, that like if you penetrate the brain or the blood-brain barrier too much, you're talking about bleeding in the brain, right? Like, it's very tricky, and they still have a lot to know and learn. Yeah,
and that study, while it was incredibly exciting, was just 3 patients at the end of the day.
Yeah.
And what I think is so fascinating about that is that, and ultrasound more broadly, is that we're not talking about a single therapeutic. We're actually talking about a whole menu of mechanisms that could be helpful in delivering all sorts of drugs that we can't target to the brain for one reason or another. There are also, the main mechanism that ultrasound is being used for and reimbursed for around the world is about heating up parts of the body to basically non-invasively sear a tumor or an area of the body that you want to destroy. But that's just one mechanism of action. Heat is one thing that you can deliver with ultrasound. Another thing you can do is create a swarm of bubbles that in a treatment area that essentially blends up, like a blender, an area of tissue that doctors want to target.
No, when it comes to bringing a new technology up to the standard of care, such as you describe, what's a way we can think about a timeline that if everything were to go according to plan, this would become available?
Well, I think that's the really interesting thing here. So Dr. Cassell has been for years saying that this, when he started out nearly 20 years ago, he thought this looked like MRI technology was 35 years prior. Now, we all know what MRIs are now. So many people have had them. If you haven't had one, you know someone who has. So on that timeline, it would suggest that we'd have, real treatments for some of these tricky diseases in the next 15, 20 years. But I think it's going to be disease by disease. For some things, ultrasound's going to work. For some things, it's not. And one of the real tensions that I tried to get at in this story is the real need for optimism and enthusiasm if you're even going to go to the effort of trying to discover these new treatments. But also, the reality of science and getting things approved and becoming standard of care requires an enormous amount of evidence. It involves designing clinical trials that are going to prove beyond a doubt, not just that something works and is safe, but at the end of the day, you want to know that it's cost effective. I mean, that's what the payers from Medicare to private insurers are going to care about.
So how do you think, and I mentioned the 60 Minutes, but you really get into the work that the blood-brain barrier and what they're doing at the Rockefeller lab, what they're doing as well. You get into it. What do you think, though, our audience, who are often looking for like the future trends, right? We talk about AI so much right now, and the GLP-1 drugs, which are really have been a big kind of innovation, it feels like, in certainly the pharmaceutical space and care in the health world. But how do you think our audience should be thinking about what you have found out about potentially what could come from ultrasound, minding you, it could take a while?
Yeah, look, I think it's a space to watch. A lot of the dollars that are being invested right now are coming from private industry, but compared to other kinds of medical technology, it's a relatively small amount of money. But I think one thing to take note is that these aren't silver bullets in and of themselves. Think of ultrasound as one tool that might augment or advance other methods of attacking very difficult to cure diseases.
And can I ask you, is Dr. Cassell the right messenger for all of this? He certainly, as you write in your story, has been great in terms of networking and fundraising, and is certainly out there.
Yeah, look, I think he's an interesting person. He's obviously got an incredible Rolodex and been able to get some well-heeled people and prominent people involved in this effort. And I think that certainly has a place. Many of the people I spoke with said that he's been very important to this field and bringing it to prominence. But at the end of the day, he is a pretty complicated character. He's by his own admission, a tough boss. And I think, folks who read the piece will get a pretty balanced view of who he is and what he's accomplished.
Sounds like he has a little bit of a sense of humor considering how he ended the story. Can you just share with us what he said to you?
Yeah, not to be too much of a spoiler, but it does tie back to my own experience. So I had my 1-year checkup. And I'm doing great. The tumor's not back, but the place where it used to sit, has grown in size, and it caused a brief moment of worry whether this was going to necessitate another surgery. And I called Dr. Cassell to tell him about this, and he basically said, "Don't worry. If you're feeling fine, don't have other symptoms, which." It's something to be admired. And he said if my editors were worried that I had a hole in my brain, that I should ask them how many other journalists we employ here at Bloomberg who only have half a brain.
On that note, we're going to wrap it up. Listen, incredible reporting. We're so glad, though, that you are well. Thank you so much for sharing your story. Noah Buhayar, he's data investigations reporter, killer reporter here at Bloomberg News, joining us from our Seattle bureau. This story is a must-read. Check it out at Bloomberg.com and on the Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, "Alexa, play Bloomberg 1130.
We got a slew of data from China: industrial production, retail sales, fixed asset investment. The latest snapshot points to an overall loss of dynamism and signs of deterioration as consumers and businesses turn increasingly pessimistic. All that said, some investors see opportunity there. Carol, Ben Harburg is one of them.
Yeah, he is founder and portfolio manager, Core Values Alpha. They've got the Core Values Alpha Greater China Growth Fund. Holdings include Tencent, BYD, Xiaomi, PDD, Meituan. Do I say that right?
Ask Ben.
Ben, we're going to ask you.
Don't ask me.
Ben is back with us. Hey, how are you?
Good. How are you? Meituan.
Meituan. Say it one more time.
Meituan.
Okay.
So
Thank you for that.
Do you get up early when you join us, or do you just not go to bed?
I get up early.
Okay.
You get up early.
No, I get up early.
All right. Well, thank you for that, because I have to say, there's been so many crazy headlines. Maybe not crazy, just the truth. We've got China growth momentum wobbling with surprise investment slowdown. China slashes steel output as industry rings alarm on demand. And then, of course, I can go to, still concerns about the real estate market. What's going on in China?
Well, it's relatively flat since we spoke last time, and we remain at what I would call kind of relative lows, particularly compared to the U.S. market. But still, a lot of the fundamentals remain sound. And when you look at individual names in the Chinese stock market, it's just a complete irrational valuation relative to their U.S. peers. And so we remain bullish and want to hold steady and wait for that moment where the U.S. market falters and China provides the opportunity for growth.
Do you think the U.S. market has to falter in order for China to move higher? Are those mutually exclusive?
It's a hard. Not necessarily, but it has been a hard case to make that you should allocate to China when the New York exchanges are ripping the way that they are. Why deal with any of these regulatory risks or question marks around the real estate market or slowing growth when the U.S. market has just been a random walk down Wall Street outperforming?
Yeah, I mean, all right. How hard is it, though, right now to make investments and make the case to your investors in terms of investing in China? Because I do think it's also fair to say that I think politically, people are still nervous about what the business environment is, what it will be, how quickly it changes around.
It's not an easy sell today. I wouldn't want to sugarcoat it. And I think that's in spite of everyone having robust data in front of them to the contrary. So, I mean, a simple example would be we have Pinduoduo, which a lot of Americans have exposure to. China's e-commerce second player, growing 80% a year. Its American comp being probably Amazon, who are growing about 20% per year. But Pinduoduo is trading on a 10x multiple, and Amazon's over 30. Mm-hmm. And Pinduoduo is deriving a huge amount of its revenue from overseas markets. It's the number one shopping app in the United States and most other mature markets. So clearly people are still afraid, even though the fundamentals are there to support the business case and are maintaining their U.S. positions.
Hey, Ben, we get the economic data that comes from official sources, but one other thing I want to hear from you is what things are like on the ground in Beijing right now. What are you hearing from colleagues, from friends? Who's spending money? What are they buying? What's the vibe?
A huge amount of pent-up savings. Today China has $12 trillion of household savings, whereas the U.S. has under $1 trillion. So I think it's under 900 billion. So people are really holding back because they are fearful of where their next paycheck will come from. There have been layoffs and salary declines and people being asked to give back their bonuses. But if you walk through the streets of Beijing, you don't see it. There's still lines out the block for your average restaurants. People are buying, and they're still going through that consumption downgrade. They're buying local brands instead of global. They're buying local cars instead of global. But it certainly is a more fragile environment where people are wanting to keep back their household income, particularly because real estate prices have declined as well as the public markets, and so people don't want to put their money out there because they're worried that it's not going to be a dollar that they put out. It'll be 80 cents on the dollar.
Tell us about the EV market in China. We talk about it a lot here from a U.S. perspective and just what China is doing in this area. And they're doing a lot. And they're certainly making less expensive cars, cheaper cars. Obviously, we can't import them here. Higher range cars. What are the dynamics that you're seeing here? And what are your expectations around that market?
We've been bullish for a long time. We were one of the earliest and largest investors in NIO when it was a private company out of our private fund side. We had long held that China was going to represent, say 5-6 years ago, the number that it does today, which is 50% of the global EV market. And they are, as you said, building cars that are better than any Western counterpart. The Europeans have actually taken them, if you can't beat them, join them approach, which now we have, the likes of VW and BMW doing JVs in China to build their kind of hybrids or EVs in China. So China is 50% of the EV market, and Chinese cars globally, not just in EVs, but combustion engines are dominating. In the Middle East, for instance, 5 years ago, China was 1% of the car market. Today, it's 20%. And people in the region, even though they can buy higher priced Western brands, are opting for a Chinese replica because it's a fifth of the price and it's a similar quality or better. So clearly a place to watch and an integrated supply chain. BYD is one of our big holdings. We're really bullish on that space globally.
Are Chinese consumers, who we know we've talked about, have been not doing a ton of spending? As you said, they're either trading down or buying domestically. That idea that we used to talk about, that they would want to buy something made in the United States, a U.S. brand, or maybe, a high-end European brand. Will they go back to it, do you think? when the economy comes back, or do you think there's a true shift more broadly in buying domestic?
I think it's a shift, and it's not economic nationalism. There had been spurts of that when they would not buy Japanese cars or something else like that. This is truly that the Chinese have built domestic alternatives that are at a better price point and at a higher quality. So certainly the global luxury brands, particularly the European, French, Italian brands, will continue to do well because they are at the highest end of aspiration. But for instance, Proya, which is one of our holdings, has now become the largest seller online for cosmetics. And I don't see any reversal to L'Oreal or others simply because people are, getting their sea legs underneath them. So the Chinese have caught up on quality, and price is still better. And therefore, I think they'll stick with those local brands over going back to the globals.
Hey, one thing we wanted to talk to you about, certainly top of mind for us here in the U.S., and I know internationally it's something on your radar. Who wins the election come November? Because both candidates have taken attack with China. Well, hard to say exactly what happens with Kamala Harris. Maybe we'll learn more tomorrow with her economic policy speech. Yeah. But we know what the Biden administration has done when it comes to tariffs. We know what former President Trump has said he wants to do with tariffs on Chinese exports, Chinese imports into the U.S., I should say. How do you think about the political climate here in the U.S. and how that changes your investment thesis?
So I would be more bearish China under a Harris regime, because I think it'll be a continuation of Biden's kind of creeping tariffs, creeping let's call it the Quad bloc and kind of the regional kind of quarantining of China from a geopolitical perspective.
But a lot of that was started under the Trump administration. So you think
that's right. It was. Okay. It was. But I would contend, though, that a Trump, Trump, is this, his negotiating tactic is this maximum pressure and let's set the bar very low and then negotiate from there. But I do think that there is a kind of black swan binary outcome where Trump could do a deal along the lines of what he wanted to do last time around with the Chinese. And this time around, they're going to be a lot more willing to deal, I think, than they were before when they were at the apex of their powers. And in that dynamic, you could actually see an improved U.S.-China relationship, at least geopolitically and maybe even economically, because they are more humbled today than they were in 2016, 2017.
That's fascinating. Ben, one thing I want to ask you, and we have been talking about it a lot this week here at Bloomberg, and this was the headline that crossed that made us all think about what's going on in the steel industry in China. And our headline was about Chinese steelmakers slashing output last month, talking about woeful demand forcing steep cuts on an industry contending with a collapse in margins. Is this the Chinese steel industry having problems, or is this global demand and that's creating problems, or a little bit of both? How are you seeing it? What can you tell us, or what's your knowledge of what's going on inside the Chinese steel industry? Did they just overproduce?
Sure. I think it's three interesting factors. Two are obvious and one not. The two obvious ones are, I think, global demand is declining. And obviously, Chinese demand is declining as well because we have overbuilt infrastructure, housing is declining. So there's much less need for a lot of those rolled steel products than there were a couple years ago. But China became so efficient and so dynamic in building these industries that this export surplus became such a burden that it's led to these trade, tariffs and other trade wars. Started with the U.S., but now expanding into Europe. And China's at this weird place where they kind of ran faster than everybody else and now almost have to come back down to earth, because if they are so efficient and such a prolific exporter, everyone's going to go to war with them on the trade front. And so they've almost got to they've almost got to come to terms with living like Europeans a bit more and training their hours and becoming efficient, but not producing at the levels that they were before, because otherwise the whole world is going to go to war with them across all different products, not just steel, but hardware, cars, you name it.
30 seconds, could the government spend on infrastructure to change what's going on in the steel industry? 30 seconds.
We're overbuilt. So I think it's unlikely. So global demand, it's going to have to come from consumer demand, which is why we've got people, loving real estate again, stabilizing that so they'll spend again. But it's got to come from domestic consumption. And I think it'll be less coming from the government and more from your retail.
Well, we so appreciate you getting up early. Truly, I hope there's a nap on your agenda later in the day. Ben, thank you so much. Be well. Ben Harburg, he's founder and portfolio manager at Core Values Alpha, joining us, as we said, from Beijing. So, yeah, I think, the Chinese story is something that we continue to talk about. We talk about it with, Doug a lot, Doug Krisner of Daybreak Asia. But you
8
do
p.m.
wonder.
Wall Street time.
Thank you very much.
Yeah, no problem.
Thank you very much. No, but it's like, we wonder, right? Second biggest economy. What happens there really matters. So, and what happens in the White House will also matter in terms of the relationship.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, tick-tock, 17 and a half minutes left in today's trading session. We are counting you down to the closing bell on this Thursday. Carol Massar along with Tim Stenovec live here in our Bloomberg Interactive Broker studio. And hey, folks, we've got a rally underway, 2.5% higher on the NASDAQ 100. The S&P 500 up 6 days in a row. On the flip side, investors buying stocks, not buying bonds, as we just heard from Amy. And you've got, what, a 10-year back up 391, just below 4%, and a 2-year note at 4.09.
Okay, so
4.1 if we round it up.
What does it all mean for Sylvia Jablonski and Defiance ETFs?
I don't know. Let's ask her.
Okay, she's here with us. It's time to drive to the close with Sylvia. Sylvia, how are you?
Hi, I'm great. Thanks so much for having me.
Hey, we're going to talk about some of your individual funds in just a minute. But before I want to do that, I want to just get a macro view from you and sort of how you're feeling about the economy. I got some pretty positive economic news this week. We'll hear from Jay Powell next week in Jackson Hole. What are you seeing?
Well, I think, we had that shocker of a Monday a couple weeks back there after the first jobs number, and then we had the Japan carry trade unwind, and there was kind of like a lot of noise and trepidation in the markets. I think there was a lot of selling off coupled with repositioning. And now that we're past that, it almost feels like, investors have sat back and thought, hey, we're actually in the same position, right? We have decent GDP growth between 2 to 3%. Corporate earnings were very good, even for the Mag 7, even though they weren't, maybe stellar as compared to what analysts hoped for. They were arguably very, very good. The consumer remains strong. Jobs numbers are looking a little bit better. Retail sales show us that, spending is continuing to hold up. And so barring major geopolitical events, uncertainty around election, things like this, I do think we're going to have a solid year end.
Do you have a cold?
I do. Sorry.
No,
I was thinking Sylvia doesn't sound like the Sylvia we know.
Everybody's like catching stuff, and there's like a wave of COVID going around. Like it's just everywhere. Sorry, no.
I know. So, I don't have COVID actually. I did.
You're like the only one we know who's sick but doesn't have COVID.
Summer colds are never fun. Having said,
I have little kids. So
I know.
That's usually the diagnosis.
They're little petri dishes. I love them, but that's exactly right. So let's talk. I want to go, if you don't mind. Have brought some names to talk about, and I love kind of talking specifics. Eli Lilly is one of them, which soared after the company reported earnings on August 8th. We saw the stock move up. They boosted revenue. They boosted their profit outlook. I mean, the GLP-1 space is so interesting. Also, which is something we look. Their second quarter Zepbound revenue was $1.24 billion. The estimate was for about $818 million. So off the charts. Eli Lilly, is it the GLP-1 play that you like?
I do like it, and the only reason I like it is because it's the one that seems to be, playing out, right? I think that they've figured out their supply constraints. There's rumors are that it's the better, option of the various GLP-1s out there. I'm not a doctor. I can't comment on that, but that's kind of the feedback in the streets there. And I just like the company too. I think they're well positioned. They have Manjaro, they have, different cancer types of drug trials going on that are showing positive results, Alzheimer's, GLP-1s, it's a healthcare company. We have massive aging baby boomer population, defensive types of plays. When the market kind of crashes, you still need health services and drugs and things like that. So I think overall, it's just a great staple to have within a portfolio right now.
Okay, Eli Lilly, one of the names on your radar. What about Broadcom?
Yeah, so Broadcom, I've talked with you guys about this before, and I always kind of talk about NVIDIA and AMD, and so I thought I'd expand it out here. But I'm very bullish on the AI innovation trade. I think it's just in its infancy. It's going to, continue to grow. And Broadcom has a cool kind of role in this, right? I think they're a chip provider on one hand, so they win there. But their whole thing is they're very well known in terms of being, a necessity type of chip player in the 5G and 6G transition. So in order to process all of this data and do the supercomputing we're talking about and quantum computing and smart cars, smart cities, and being able to connect and share data, you need lower latency, and Broadcom is really the chip that gives you that. So NVIDIA is the data center chip, and Broadcom is very much necessary for 6G. So that's why I like that stock there too.
How much of the optimism though about these names and what you laid out? I'm looking at Broadcom is up almost 50% so far year to date. If I look at Eli Lilly, it's up almost 60% year to date. And there's another name that you like, MicroStrategy, that's up 107% year to date. How much of the optimism that you have around them is factored in?
Yeah, I think that all of them, that's a great point. You never kind of want to buy, a stock when it's at its peak. And actually some of these names, and I'll throw NVIDIA in there too, right? They're still well off of their July highs. There's still some room to run back up to where they were. But I just think that, again, like we're the beginning of this AI thing. And although during earnings season, I think investors were disappointed because they were expecting revenues. Where's the proof in the pudding here? But this is just starting. And so companies need to spend, and they're starting to spend, and we're getting this, the outlook that they're doing so from these companies on their earnings calls. And I think that like the actual revenue part of it is going to start playing out in a few years to come. So yeah, I still think you have room to run. I don't think you're going to get like 100% years every year, right? But they have room to run.
Hey, Sylvia, we have 45 seconds left. We got to get your thoughts on a story by Vildana Hyrick and Isabel Lee. Wall Street just got its most volatile ETF as risky bets boom. They're talking about a new Defiance daily target long MicroStrategy ETF, MSTX. What's going on?
So 1.75 daily levered MicroStrategy ETF. We just launched it today. It's like running out of the gates. What we like about this here is it's another proxy for crypto. And if you compare it to the Bitcoin ETFs, Bitcoin itself, the performance of this, I mean, Carol mentioned it's over 100% year to date. Mm-hmm. Most of those at their highs are like 30 to 40% year to date. And so it's a great proxy for crypto. It also dabbles in the AI space. And I think that a lot of retail investors just want to trade this thing.
Yeah, and you're seeing a lot of activity around it?
Yeah, close to 1 million shares. We might even have hit that number by now, but it's probably one of the fastest run-ups in volume we've seen on an ETF launch. So pretty exciting.
Listen, super glad to get some time with you. Feel better, vitamin C. I know those kids. Send them out to relatives and watch them for a little while. Sylvia Jablonski, CEO and CIO at Defiance ETFs. It's always hard. I was never sicker when my kid was young.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.